Good morning. This webinar offers closed captioning. To enable closed captioning, click on the live transcript button on the bottom of your screen and choose your preferred method. Welcome to the Chicago Department of Business Affairs and Consumer Protection webinar. Please note any website or email that I mentioned will be posted in the chat. For those seeking business license assistance, you can visit us here at City Hall in the Small Business Center or call 312-74-GO-BIZ. Also, business license can be applied for or renewed online at chicagobusinessdirect.org. If you are part of the BACP Entrepreneur Certificate Program, you can get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. To learn more about this program, please visit chicago.gov/business education. This webinar is being recorded and will be available at youtube.com/Chicago BACP. We like to encourage all of our attendees to ask questions. Please use the chat box to send your questions. There will be a Q&A session at the end of this presentation. Please note that the views, information, and opinions expressed during this webinar are solely those of the presenter and do not necessarily represent the official policy or position of the Department of Business Affairs, Consumer Protection, or the City of Chicago. At this time, I will now turn this webinar over to Roy for us to begin.
Thank you, Stella. Thank you, first and foremost, to the City of Chicago Business Affairs and Consumer Protection Office for having this webinar. And I want to also thank those dialing in here for this great opportunity here to hear this presentation here, the power of capital, how to fuel the growth of your business. Let me start by introducing myself. My name is Roy Nunez. I'm a senior business consultant here at Chase. I've actually worked for Chase the lapse of 23 years. I've held various roles, and I'm very happy and excited to be part of your Friday morning here. Hopefully you've grabbed a cup of coffee and you are ready for this presentation. So if you could go on to the slide here, the next slide. Stella, I'm sorry, I'm not able to see the slides.
Say it again.
I'm not able to see the slides.
Did you upload it? No. Did you share your screen?
I'm not sharing my screen. I thought that was something the last time I did this, the department actually did that and was moving the slide.
Give me one.
Give us a second here, technical difficulties.
And you sent Geraldine your presentation, correct? All right,
Yes.
hold on. Okay, Roy, Geraldine is not at her desk. Do you know how to share your slide?
Let me see. Give me one moment. I'm sorry.
Okay. Okay, yep, there it is. I see it.
Okay, so let us start again. Can you hear me now? Stella?
Yes, we're good.
Okay, so again, Roy Nunez, Senior Business Consultant. Thank you for your patience here as we work through technicalities here. So why are we here? Definitely, we understand that all businesses deserve an equal opportunity to prove themselves in the marketplace. We have found out that the difference between those that can prove themselves and those that don't really don't have access to one, knowledge, two, tools and resources, and three, consultation. So why now? Well, it's important here when we look at what happened as part of the pandemic, the civil unrest here in the 2020, the year 2020. We know that when all businesses succeed, we all win. We're going to get more opportunities at competition, more job creation, more economic growth. So the fundamentals still matter here. Fundamentals like positioning your business for growth through access to capital, managing cash flow, and then really importance of the strength in relationships as it pertains to your customers, vendors, employees, just to name a few. Now, the survey here, 39% of minority-owned companies feel their primary bank treats them with respect. When I look at the word respect, I'm thinking of does your bank take the time to get to know where you've been, where you're at, and more importantly, where you're going? And so the more we understand about our business's needs, the better allies we'll be in this process. Now, the banking industry has determined that it has underserved its communities. Now, the important part here is what are we doing to change that? In here at Chase, as an example, we've started a minority entrepreneurship program. Again, just to give a little commercial here, and it has three pillars to it. One, education. Two, tools and resources. And three, consultation, mentorship. But to be part of that mentorship program, you'd have to have at least 2 years in business, revenue size of over 100,000 to about 1 million plus, and then also be in an underserved or majority minority or minority-owned business. So survey here, not necessarily need to put in the chat, but just be thinking about this as you are looking at this. How confident do you feel about your business credit options? If you are somebody feeling at 1, hopefully by the end of this session, you're maybe at 2 or 3, 4, or maybe leapfrog all the way up to 5. And if you feel like you're at 3, then hopefully we can get you to 4 to 5. And hopefully by the end, you would have felt a little bit better around your business credit options here. So what are we going to cover? The first part of this is thinking strategically about cash flow. Second part is, does your business need to borrow? Third part here is, why are you a good investment? Fourth part here is, what financial data is important? Fifth, what are your credit options? 6, SBA loan programs. And we're just going to topically cover that. We would suggest here that you engage your business, the bank where you hold your business account, or any banker that you talk with to give a little bit further details. And then we'll end here with obviously making sure you're in a position to build your own empire here. So when we think about cash flow is so much more than just money in the bank. I mentioned this to business owners quite often. Being in business is probably the most difficult thing anyone can do. When you think about, trying to get more customers, you think about, keeping great employee relations. When you think about vendor relationships, all that stuff is difficult. But when you boil down how hard that is, there's something simplistic about business. And that being, your goal as a business owner is to speed up how you get paid, slow down who you pay, so that on any given moment, there are large sums of money sitting in your account. When you have those large sums of money sitting in your account, that gives you latitude and flexibility that someone that stares at a close to zero balance does not have. And so when you think about the tools that exist to help speed up how you get paid, those exist, when you think of merchant services, ACH collections. On the slowing down who you pay, specifically because we're going to talk about access to capital here, you have to look at your expenses like having 3 time frames for repayment. There are expenses you have today that you know you're going to pay within 30 days. There are expenses you have today that you know they're going to take you greater than 30 days, but under a year to pay. And there are expenses you have today that'll take you greater than a year to pay. And when you section out expenses that way, you're going to be able to use the best tool possible to help finance that expense. So the tool that you would use for anything that takes you greater than a year to pay, that's what business loans are for. Anything greater than 30 days, but under a year to pay, that's what lines of credits are for. And anything that's going to take you less than 30 days to pay, that's what business credit cards are for. And so you'll hear this shortly as we cover the different products that exist later on in this presentation. So how do businesses use cash flow? Well, as you know, you use cash flow to pay your suppliers, your employees, rent space, and reinvest. After this presentation, you're going to receive a workbook. That workbook is going to allow you to maybe look at some of these concepts, and there's some case studies that you can work on. The next slide here kind of touches on that. And so the BACP is going to be sending out the workbook after the presentation. So a couple of cash flow takeaways here is we know cash flow needs to be managed. You want to make sure you have an efficient process for how you get paid and who you pay. Again, speeding up, slowing down, and then making sure that you think strategically here around borrowing. And so this is the next topic we're going to cover is, does your business need to borrow? So if you think of the day-to-day, you ask yourself, okay, I'm in a position now to borrow, say to maybe manage cash flow, manage working capital, grow your business. You want to make sure that you're in a good position here to be able to get that done. And we're going to cover that shortly. Now, just remember that when you borrow money, you need a plan to pay it back for certain. So what do lenders need and want to know? Well, you look at these questions here. How long have you been in business? Is your business profitable? Is your business seasonal? Do you need to build credit? Are you looking to expand? And will the new equipment that you have actually help your business? We can boil this down to the C's of lending. And if you have a pencil or pen and paper, I'd like for you to jot down these C's. The first C, C as in cat, is character. Next C is credit. Next C is conditions in the industry you've chosen. The next C is capacity. The next C is capital. And then the last C is collateral. And I'm going to go over these individually. So when you think of character, you're thinking of a function of time in business. The longer you've been in business, the better understanding that someone that's going to either give you money or lend you money knows that you weathered some ups and downs. When you are short of time, or even if you have had time, important here to keep in mind that a business plan has a great opportunity here to lend sight to your business. Your business's past, your business's present, your business's future. And then making sure that within that business plan, you are allotting for what is your business's strengths, what are its weaknesses, what are its opportunities, what are its threats. And if you're looking at borrowing money, how that money that you're borrowing is going to help shore up whatever weakness that business has. Say, I have an aging fleet of equipment, and by borrowing, say, $50,000, This 50,000 is going to help me become in line with the competition. It's going to also help me be more efficient, and it's going to help me maybe get jobs done much faster. So being able to tell the story around what the business is looking to do. So around character, a business plan is very important to have. And a business plan isn't something you have just when you're starting up, right? Think of a business plan like when you have a resume at work, right? I have a resume. I've worked for Chase for many years, not looking for work, but I'm updating my resume as I gain more and more insight to various roles, because who knows, tomorrow I may be an ex Chase employee. And so I don't want to go back and try to write a resume. I want that resume to be a living and breathing document. So is your business plan. The next C is credit, as I mentioned, making sure you have strength and credit in the business and strength and credit on the personal. And so when we look at on the personal side is making sure that the line utilization on your personal credit is low, that you're making on-time payments, and hopefully that the history of your personal credit has longevity, it's long. On the business side, the same, making certain that you have had some credit exposure on the business side, that you are using the products that exist as they should, meaning a credit card, expenses under 30 days, you use a credit card, you pay it down fully. That's how a credit card should be used. And that's how you start to build and strengthen credit in the business name. Conditions in the industry chosen, very important here. Lenders are looking at the industry you've chosen. And there are some industries that present a little bit more risk than others. And so understanding what the risks that are part of your business, and again, in your business plan, delineating those and making a case for, this is why I believe I should receive a loan. Example of a industry that has a lot of turnover, retail, subcategory restaurant, if you will. For every maybe 5 restaurants opening, there's maybe 2 or 3 closing their doors. Now, what makes you that 1 or 2 restaurants that are going to stay open, and making a case for that? What is unique to your business? And again, that's where the importance of having a business plan come into play. 4, capacity. So basically, the figure here is for a dollar in debt you are, could be, or will be, there's $1.25 coming in a form of profit to cover your existing debt and your future debt. And then around capital is, are you reinvesting back into the business? So, again, buying equipment, that's reinvesting back into the business. And then lastly, collateral. As I mentioned to business owners, collateral doesn't make the deal better or worse. It just gives you, the client, better terms and conditions. Now, there is some collateral that a lender may not take because it doesn't fit in in what they're looking for in collateral. So you also want to see what lenders are out there that are specialty lenders that where that collateral you're looking to give is one that they take necessarily. So for the purposes of this presentation, credit, when I speak credit, it's credit between, it's an agreement between the borrower and a lender. So not necessarily creditworthiness or anything of that nature. Now, in your workbook that you're going to get, you're going to be able to have this worksheet where you're going to be able to look at your business and kind of see the environment that exists and everything else that you would need to kind of prepare yourself to see if you are ready for that next step around access to capital. So I would encourage everybody to go ahead and do that as soon as possible, or at your own leisure, of course. So question here is, why are you a good investment? You are the business's most important asset, for sure. Now, I mentioned this to business owners. There is a difference between a manager and a leader, or managing and leading. You think of a leader as somebody that's looking at the future. You think of a manager as somebody that's managing the present or even perhaps the past. You want to make sure that you have a strike balance between leadership qualities as well as managing qualities. You think of sources of repayment, so think of leadership as yourself. Think of cash flow as your straight reason for being able to apply for a loan or a line or a credit card that's going to be able to help pay back whatever it is that you're looking to undertake. And then collateral as, again, another source of repayment. Again, this is part of the C's of lending. So if you take that leadership, replace that with character, cash flow, and collateral, the big threes, if you will. Something that I wanted to mention earlier, when you look at the C's of lending, maybe as you outline them, what I typically ask a business owner to do is to kind of put a check mark or an X next to each point, and ask yourself, under character, do I have strength? Put a check mark, right? Under credit, say, is that strong? Do I have a check mark? And after that exercise, you have more checks than you do X's, then you should be feeling a little better about when you walk into a bank, the prospects of probably receiving what it is that you're trying to get done. So keep that in mind also, doing that exercise for yourself. So we know that there's two types of credit, for on the personal side. There's scores between 300 and 850. And then on the business side, so on the personal side, you can ask for your personal credit score and be able to see it. On the business side, it's not so, that's not the case. Basically, as you apply for loans, lines, or credit cards, the lenders are able to see the score when they look at Dun & Bradstreet, and they also look at the Small Business Financial Exchange. So what financial data is important here? So if you think of, making sure that, so the loan officers or the banks want to know that they have confidence in extending credit to you, that it will be paid off, definitely. And so they're going to want to see your tax returns. Your tax returns, in some cases, over the lapse of 2 or 3 years. And so what you want to be looking at, or what they're going to be wanting to see, is strength and growth in revenue, strength and growth in profit, and making sure that you really have strength in those numbers to be able to repay back your debt. When tax returns are over 6 months, typically a lender is going to want to see a balance sheet. And so the balance sheet really speaks to the business's assets and the business's debt, liabilities. And so making sure you have that at your disposition can also lend some opportunities for an understanding of where the business sits with capitalization. Profit and loss statements, again, making certain that the revenues, when you're doing a profit and loss statement for in an interim manner, right? You haven't put through this on a tax return. Those figures are showing strength in growth, meaning, let's say last year you finished at $1 million and it's half year, or maybe in this case we're in April and you're already at 600,000, kind of explaining why, it's not even half of the year and already you're at 60% of last year's revenue figure. So being able to explain that is going to be very important here. So what credit options exist for your business? There's couple of ways here to access capital. I mentioned this earlier. So we've got business credit cards. I mentioned this earlier around business credit cards existing. And so you think about a credit card, it's going to help you first and foremost manage cash flow for expenses that are 30 days or late or less. It's going to also help you build credit and bolster credit in the business name. It's going to also help you protect your operating account. So if you're somebody that gives a company a check for $1,000, and by mistake that company puts an extra zero on there, like maybe clerical mistake, and now 10,000 are coming out of your account instead of 1,000, you could be in a pickle, if you will. By having a credit card debited, if that mistake happens, nothing really happens to your bank account. So, being able to ask potential vendors or those that accept credit cards that you're going to pay, do they accept credit cards? This is why you want to be using a credit card. It's also going to help separate what's truly business from personal. And then in today's world, a lot of credit cards offer rewards, lines of credits, again, for expenses greater than 30 days, but under a year, again, for cash flow management purposes. It's going to help you also build credit in the business name. And then again, being able to imagine a situation where today is Monday and Friday comes along and you are in need of money for payroll, right? And the money that's in your account is just for that. And all of a sudden, a new project comes along and you say to yourself, well, I can't undertake this project because my customers aren't paying me on time. Well, using a line of credit to front maybe that project so that you have money to cover your payroll. This is how you kind of want to visualize a scenario happening that allows you to use that tool for that financing, if you will. And then the last product here that we have is term loans. So again, if you're thinking something is going to take you greater than a year to pay, well, that's what business loans are for. And that's really what you want to be thinking about, is being able to take, let's say you need equipment, your equipment broke, and now you need 30,000, you have 40,000 in your bank account. You say, well, it's super easy. I'm just going to take 30 from the bank account and just buy that equipment. Well, you don't know that there is some expense that you had that was unexpected, or your business has to close unexpectedly. The pandemic kind of showed us here, anything is possible. And now you're in a situation where you don't have enough money to kind of see your business through. Well, if you'd have taken a loan and would have made monthly installment payments, that 50,000 would have sat in your savings account that allows you to have the latitude and flexibility that I mentioned earlier at your disposition. So if you are applying for loans, lines, credit cards, well, if the answer is a no, there are other entities that exist that can potentially lend you or give you money, right? Think about CDFI loans, think of venture capital, and business grants. Business grants are far and few in between, but again, those exist. And so just be thinking about other sources of capital that exist out there. Along the lines of SBA loan programs, the SBA helps mitigate in certain situations. And so this helps you in this case with the SBA loan terms may be a little longer, which allow you to have smaller payments, which will allow you to maybe have that loan be approved. Also lower down payments. And so in this case, it truly allows, the SBA guarantee allows you to potentially get a no into a yes. So who's eligible for an SBA loan? And again, I would urge you to seek the counsel of your banker at the branch around SBA qualifications. And so businesses with less than 15 million in tangible net worth and average 5 million income over the past 2 years. So there's 3 main products that the SBA has. One is the SBA Express. Typically comes in a way of a loan or line of credit. This would be in our workbook for you to kind of read through this fictitious business and what it did as far as an SBA Express loan. The SBA 7A terms of for up to 5 million, ranging from 7 years to 25 years. 7 years for working capital and 25 years for real estate. Again, workbook here for you to, an item here for you to look at. And then the SBA 504 long-term fixed rate financing that's going to help either expand or renovate your owner-occupied property, making certain that you look into that, should that be an option. And then again, this is a business that on the workbook that you can look at and what it did as far as acquiring a 504 loan. So again, having covered all this, I would say we have all the tools today to kind of position ourselves to build that empire that we're looking for. And, you know, I would say here, going back to the initial question, I hope that we've gotten some of you from a 1 to a 3 or 4 or 5, or some from a 3 to a 4. And hopefully if you were at a 5, you had some takeaways in this presentation. Before I get to questions, I wanted to mention the Minority Entrepreneurship Program. If you scan that QR or you want to look at my information, I'll leave it here for a couple of seconds, but I'll come back to questions here. I'll throw it back over to Stella for questions. If you have an opportunity here to learn a little bit more about our Minority Entrepreneurship Program here at Chase, that's the information. So Stella, you want to kind of look through and see what questions exist that I may be able to answer?
Okay. Let's see here.
Or even if there aren't any questions, if there are any takeaways, any aha moments, anything that they heard today that they can take back and say, you know, I can immediately start to do something with this. So
I see a question. Dunn's number, do we need it?
It's something that you should apply for. You should want to need it because the DUNS number is going to help you register what you're doing as a business with loans. No, so Dun & Bradstreet is something that is self-reported by you, but then there's the Dun & Bradstreet institution, which is the version that institutions use to look at your credit payments. But important here that you at least I'm certain here it doesn't cost anything, so it's something that you should at least have.
If your business is a startup, is it harder to get business credit card?
I would say that in that instance, the reliance on your personal credit card and the strength of that should help to, in some ways, jumpstart the credit on the business. But again, all the other C's kind of come into play as well, right? Is your business in a high risk business? You know, your personal credit, you know, the strength of it. So these are all things that would come into play. I would say it's a little bit harder, but not insurmountable.
Any reason why taking a business loan with Chase is better or different than dealing with other banks?
Well, I would say we, as far as other banks, I would not comment as much as let everyone know that we have a process for asking our clients questions, determining needs, and recommending based on those needs, solutions. Now, does that compare to bank A, B, or C? Perhaps. But we're going to take the time to get to know what it is that you truly need through the questions we ask and the solutions we suggest. We tell the client just that.
If we have poor personal credit, can we still get a business loan?
It would depend on the lending institution's appetite for that. But if you have tried at a bank and the bank has said no, right? So you should always try. And if the answer is no, I mentioned in the presentation that CDFIs exist, community development financial institutions, and those entities exist to they're funded by banks and they have their own funding methods as well. But community finance, the CDFIs exist, community development financial institutions exist to maybe try to help in scenarios where there's some weakness in your application. So I would suggest that maybe looking at that option may provide an option.
Any loan opportunities for nonprofits?
Loan opportunities for nonprofit. Well, that again would entail getting to know the business operation and what it does. As a senior business consultant, we work with for-profit entities. So I would probably say that would be a little bit out of my scope, if you will, my line of expertise. But I would say no different than on the business side, with the exception that we're not looking at the personal as much as they are looking at the business and what it's looking to do. So again, having the strength of your business plan, the strength of your operations, being able to put all that, and then kind of building a case for why you need the loan or the tool to help manage cash flow.
SBA Express loans are a joint program through a bank and the SBA organization, correct?
So SBA has additional questions that it's going to ask. And so there are institutions that have that are preferred lenders of the SBA because they have their in-house operations allows them to expedite matters. So Chase happens to be a preferred lender through the SBA. So there's additional paperwork involved when you're doing SBA loan. And I would say in that case, inquire with your banker so they can provide you a little bit more detail on that.
Of a statement. I have been rejected previously for SBA products because of late reporting on the Department of Education student loans from 5 years ago. I guess she asking what should she do?
Yeah, because it is a quasi government entity, the SBA, they're gonna want to make sure that you're up to speed with things that not only are debt related on the personal side, but then anything that you've undertaken through government programs previously. But again, I would on that one, that's really more a specific SBA question that I would probably try to contact the SBA on directly.
How can I use my business credit versus my personal credit? I'm rebuilding this right now.
Yeah, so when you are using your personal credit cards to fund your business operations, you're uh, hurting yourself on the personal side because typically your expenses on the personal side are higher. And so I would venture to say line utilization on your personal starts to take a hit. On top of that, when you, let's say, apply for a credit card and you've gotten approved for, let's say, 25,000, typically what happens on the personal side, it stays on your personal. When you apply for a business credit card, assuming the institution only reports to the business, right? You apply for a $25,000 limit, typically that would show up on your business report, not your personal. And the only time it shows up on your personal is when you are late in making payments. So if you went ahead and took out try to take out a mortgage and they ran your credit, that 25,000 that you applied for the business most likely will not show up on your personal. So it doesn't come out as something that you necessarily owe personally at that point. So that's where you want to make sure that you separate what's business from personal. Yes, you are personally liable for it. You're personally guaranteeing it, but if you're making payments on time, which everyone should, then it's not going to show up on your personal credit. That's typically how that works, or the way it should work. So so just along those lines, if you run your credit and you see something on your personal report that should be on the business, you may want to contact the institution that you have that with and ask, why is that showing up on your personal?
How can minority businesses get started if they have no access to capital because they have not been in business for 2 years?
Yeah, so being in business, so again, if you think of the idea here of I'm starting a business and I'm looking, so let's say I was a long time, I love food. I think my middle name should be food, but anyway, and I was chef at a restaurant and I was there for 12 years. And in that process, I gained a lot of insight to how to run a business. And I decide that, maybe through disagreement with the owner, I find myself without a job anymore as a chef. And I say, well, I'm going to open up a restaurant. I think I could run one. Hopefully in that timeline, you would have saved some money for that eventuality, right? So there's some form of investment myself into that operation. You are going to use that business plan to explain why you're starting that business and why that business means so much to you, right? But hopefully you want to do this while you still have income coming in, because then they're able to look at some cash flow, even though it's coming on the personal side, to help fund that operation. If you're short of that, then kind of looking at potential grants that may exist out there to help you. Again, there are people out there that will, venture capitalists that will give you, not give you money, but will trade that in exchange for some ownership, so on and so forth. So, but again, if you're looking to try to get this done yourself, it's not out of the realm of possibility. You just want to make sure you have all those nuts and bolts tight.
Where do startups get capital from?
Yeah, so I kind of answered that on the last question. So you want to maybe have raised a little bit yourself. And if you're short of that, kind of look at if you're looking at grants necessarily instead of loans to pay back, then maybe looking and see if there exists some grant opportunities out there. But kind of the main purpose here is kind of positioning yourself for that access to capital on the lending side.
Since I'm just opening up my business, what are the requirements I need to open up a business loan so I can start up my business in towing?
So you're starting up your business. I would probably say, if you've incorporated it and you have not opened up a bank account, would be very important to get a bank account going. Again, kind of looking through those C's of lending and making certain that where you have strength, you delineate it. And then again, I would rather have somebody try something, and if it doesn't happen, be told what needs to happen for it to happen, as opposed to saying, I don't think I can. And then you yourself you discourage yourself. If you have belief in the business, if you have belief in being in business, again, it's almost like that child that is looking at maybe going to a Harvard or a Yale. It may be tough, but you shouldn't be discouraged at least applying, because you may get a yes in that process.
How long does your corporation have to be active in order to get $1 million business loan?
So it's not how long the business has to be out, but the revenue side. So anything in life has to do with your income and your ability to pay back. And so again, on the personal side, I could make, and I'm nowhere near it, I just want to be very transparent, right? I could be making 200,000 a year, and those 200,000 actually can afford me probably $500,000 home or better. But if in my tax returns, I'm taking a bunch of deductions, right? And I now don't have enough money to cover that $500,000 loan, that money that I have isn't going to help me, because I'm taking a lot of deductions. So the $1 million loan is going to come in the form of, do you have the capacity to repay it? What is the need? What is it for? Right. So along the lines of, again, that business plan, along the lines of, did you establish credit in the business name? What lines do you have outstanding that are close to it? Right. So if I just graduated from college and I want a $500,000 mortgage, I'm probably not prepared for that. I probably would have needed to have more years as an employee. Probably would have need to have had a little bit more lines of credit, maybe paid off a car, so on and so forth. So lending to a business is no different than lending to an individual. And that's what I try to do, is explain things in a manner that allows you to see it on the personal side, kind of on the business side. So that's actually an interesting question, but it's a question that has various layers. And I would suggest that for that person that's looking for $1 million to kind of maybe schedule an appointment with their banker just to have that conversation.
Okay, let's see. I'm going back to the chat. Wait, where did it go?
But great questions. I mean, they're tough ones too. But some that I would say try. It's better to try and fail than fail to try.
Here's a question. I own a Harold's Chicken and I have enough revenue coming in to pay the loan off. But however, I just switched my corporation name. I want to take the money out to open up 3 more stores.
Yeah, so along the lines of, you have money, is it better use your money than someone else's money? When you have money, you're coming at this from a little bit more leverage. You may want to think about, and again, talking to your banker about maybe using some of that to fund the operation, but then using and then keeping some of that, because you never know. and then kind of making easy monthly installment payments on the other. Again, these are specific questions that have many layers to it. So, the answers I'm giving probably don't give much justice to your specific situation. That I would suggest that you speak to a banker, include your accountant in that conversation, because they're very interesting questions.
Do banking institutions account for business grants differently when looking for a loan?
Well, a grant typically is given to you without necessarily having to pay it back. So if you applied for a grant and you were allotted a $15,000 grant to fix your facade, example, that's not money that you owe. That was money that was given to you for a particular purpose. So again, they're looking for what you've done to strengthen credit in the business name. Do you have the capacity to pay back? So for every dollar in debt you are, could be or will be, that there's at least $1.25 coming in the form of profit, and that you're in your. So think of the. So another thing I mentioned is think of what's in your tax returns as the black and white of your business, and think of your business plan as what's going to add color to the picture. And so those two things kind of have to mesh, right? If your financials aren't so strong, your business plan cannot be too rosy. So there's got to be some meeting of the minds there as it pertains to your business plan as well as your financial results. Ultimately, again, anytime a bank or anyone is lending money, there is a chance that it may not come back. And what banks are trying to do is mitigate any possible chance that that money that's leaving won't come back. And so they're going to dot their I's, cross their T's, and do their due diligence. And if something happens that didn't happen, where the money didn't come back, it wasn't because the bank didn't do its due diligence. It's just something extraordinary happened, right? But that's basically the name of the game here is we're going to lend money, we're going to assess risk, and be able to live with the decision, regardless of what happens.
Is a micro lender a better option than a standard bank?
I would. So again, I think that so sitting here and saying one is better than the other is probably wouldn't do anybody any justice here. I would say it's like anything. You want to read up on them, investigate, and not kind of feel for yourself what option you think would be best for you. Again, there are some lenders out there that are specialty lenders that will get something done where somebody else will not. And this is where kind of investigating specifically yourself, what you're most comfortable with in that regard. So that's a tough question that I would say investigating on your own end and kind of researching might give you the better answer.
I'm checking. To simplify, for every one invested, you should have 25 cents of profit.
So yeah, so typically that is for every dollar in debt you are, could be or will be. Typically, what the calculation is looking for is $1.25. So example, if I have a debt today of $500, just to make the math simple, $500, annualize, that's 6,000. And let's say my profit is 18,000. 18 divided by 6 means for every dollar in debt I am today, there's $3 coming in to cover that. Let's say I now need another equipment, and that equipment is going to cost me $500 as well. That would make it another 6,000, right? So that would be 12,000. You take 18 divided by 12, that puts us at about $1.33, if I'm correct. And so that passes. But if I was at a $12,000 profit and I now have 12,000 in debt, I'm at 1. So for a dollar in debt there's $1 coming in to cover it. I don't have enough. They're looking for at least $1.25. So the answer may be no, or if they can elongate the loan via a different method, then maybe the figures kind of work out. So that's kind of how that comes about for those looking at the math.
How do I view my company credit score?
Yeah, so that doesn't exist. It's pretty much what you want to do is make sure that so when you take out a loan, right, they'll tell you, there's you were approved. So you have a credit card, a line of credit, you're making on-time payments, right? The lender, if you apply and they decline you, they'll tell you something is showing up on your business credit. At that point, it becomes something that comes to the forefront. It's not on the personal side where you could ask for your personal credit report and one will be given to you. But the two main reports that are used is Dun & Bradstreet Institution, and the Small Business Financial Exchange. And maybe perhaps you can Google that and see if there's a number where you can contact and see if they'll be able to do that.
Can I have a business secure credit card?
There are some lenders out there that provide secured products, both on the personal and business. So yes, that option exists.
Doesn't look like we have any more questions. You have any final words of encouragement?
I would say, small business, as we have heard, backbone of our communities. I would say everyone is doing what they're doing because they have belief in their business. So just stay strong to that. Just keep plowing forward because you're making a difference in the communities that we live in, and those that employ people, you're even making a more impactful change, if you will, or opportunity here. So that would be all that I have to say, Stella. Hopefully some people got some takeaways from today's presentation for sure.
Presentation. If you are a part of the BACP Entrepreneur Certificate Program and would like to receive credit for today's webinar, please send an email to bacpoutreach@cityofchicago.org. To learn more about our upcoming webinars, please visit chicago.gov/business education. And have a great weekend, everyone.
Thank you.